Bitcoin jumped to $107,000 end of June, a new monthly close all-time high, again, as predicted. I think there will be many more all-time highs in the months to come. Of course, we're still in the bull market. The bull market continues. The question I hear a lot is, why isn't the price much higher than it is right now? Because Michael Saylor is buying, MicroStrategy, there's huge inflow in the ETFs. So why is the price not higher than it is right now? After Trump, the war on crypto ended.
I notice more and more you pay in Bitcoin. I mean, people are saying it takes a lot of pressure off the dollar, and it's a great thing for our country.
With new regulation, this war on crypto is raging on like never before.
Today we have Bitcoin bulls Plan B and financial analyst Tom Lee giving their Bitcoin, crypto and market prediction for the coming weeks and what we can expect in 2025. Historically tracking the price in the year following the Bitcoin halving and on the heels of multiple all-time highs, they believe this year will be the beginning of a massive $400 trillion inflow of capital into Bitcoin. The current price for Bitcoin sits just over $109,500, up almost 4% in the past month. They discuss the extreme volatility we've seen recently, and in the coming months, we'll witness one of the biggest price rises so far since the creation of the dominant cryptocurrency. The story will become even bigger in 2025 because of the Bitcoin ETFs, with thousands of institutional investors across the United States now buying Bitcoin. The demand for the leading digital asset has increased exponentially. This has caused a never-before-seen supply-demand imbalance for Bitcoin, and everything is about to change. Let's get right into the latest interview with Plan B and Tom Lee as they give their market prediction for what's coming in the days and weeks ahead.
So we're still far away from this 500K average that the stock-to-flow model predicts, but we also have almost 3 years to go in this cycle. So there's a lot of time to reach those levels. So orange means months until the next halving. So orange would be, 33, I think 32. Now note that 40% of the people thinks that Bitcoin will not reach 200,000, that's this line, before the end of 2026, that's this line. So looking at this chart, I think it will go to the stock flow level and at least go to this 200K level, but 40% thinks otherwise. So that's very interesting. And I mean, it's not a crazy thought, because you see this curving of this line. So they think in diminishing returns. So they think this curve will flatten and in fact not go above the 200K line in the next 1.5 years. And that's in fact the bet that the big bet that's underlying this market. I think investors are rotating out of Bitcoin self-custody into ETFs and MicroStrategy, Bitcoin treasury companies. A bit like I did myself. So I sold my Bitcoin that I had in self-custody, and I placed most of it in ETFs with new regulation where they declare war on self-custody. So for people in Europe, it's really hard to sell, especially old coins. And so an ETF removes all those barriers, because there's very little know your customer and barriers compared to crypto. So yeah, I think that's behind this relatively flat bull market. So there's a lot of selling of old Bitcoin holders that put this money back in Bitcoin through an ETF or MicroStrategy. So it's a rotation actually, and not much new money. Once that rotation is done, however, and the new money flows in, of course, that's when the price should reflect the scarcity and supply shortage that we have right now in the market. Now, the interesting thing is that a bottom is at the end of the bottom, when the bear market is over and the accumulation phase begins, when it turns from green to blue, That's very easy to predict. And that's a very solid prediction. It always goes right in the past. It's also on the charts underneath this model. It's really easy to predict a end of a bear market. The bull market, however, the top is very hard to predict. So there will be a time, it's not now, but there will be a time when the orange or the red dot turns into yellow, into distribution, and that will be followed by a bear market. However, here, if we look at 2018, that was a very clean distribution phase. Red turned to yellow, it ran its course, and then the bear market green, and then another cycle. Stock to flow, FOMO jump here in the price, we saw that, and then when the halving didn't immediately turn into cause big price jumps, then people got disappointed, and then of course then it came after all, the bull market, and that same is happening, or happened in 2024. In the beginning, there was the ETF. Introduction of the ETFs, the approval, and we had some FOMO there, and then the cash inflow didn't come, and so there was disappointment, and that's why. And then we had Trump, and he did some good things, and the war on crypto, but then he introducing his own coin. So we had some FOMO and disappointment last year, and that's why this RSI average shows a little wobble here. Well, I expect it, and actually that's what we're seeing last month. It picked up the upward slope again, so I expect it to continue. So what we see is that all the realized prices are increasing, which is good, and Bitcoin is at 107,000 above all those realized prices. And that's a typical signature of a bull market. You can see it in every bull market. All the realized prices are increasing, and the red dots, the Bitcoin price, is above them all. So classic bull market behavior.
Plan B says it's the fastest pace of adoption of any investable asset in all of human history. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all. Plan B has been stressing to investors for months that all the factors are beginning to align right now, a period characterized by parabolic moves upwards in crypto prices.
I think that it is appropriate that we are making new highs because the fundamental and the visibility is better now than it was in February at the old highs. And I think there's three levers that are going to get pulled. One we know is that the Fed didn't unleash liquidity at the April lows. So we have a Fed that's been on hold and tight. But if the information and the data comes in dovish, that's 12 to 24 months of Fed liquidity and dovishness. That hasn't happened yet. The second is that I think that there is a false argument. People are saying the multiples are stretched. The PE should be expanding because we've now had 5 stress tests that companies survived. They survived the bullwhip effect, they survived the inflation surge, they survived the Fed fastest hikes, and now they survived Armageddon. If you don't have 5 more episodes, multiples will be higher 2 years from now. And the third is that I agree with anybody who says that, look, we've kind of reshaped some of the economic flows around tariffs, but that's an upside story because if it plays out better, that's an earnings surprise. So you have 3 levers that tell us that 6,200 is the market beginning to recognize we're in a better position, while $7 trillion cash is on the sidelines. And I can tell you, our clients, institutional clients, remain very skeptical. This is the most hated V-shaped rally. In fact, money market balances have declined. They only started to rise really in 2022.
Right, they had a stutter step and then they went up.
If you look at margin debt, NYSE margin debt, the dollar amount absolute is still below where it was in October 2021. So you have like 4 years, it's 4 years and you're still not even higher in margin debt. And third, it really doesn't take, you don't need 60 trillion to come into the stock market to have it rise 10%. You probably need 200 billion. And I think there's a lot of high net worth money. I know there's a lot of our institutional long short macro that is shorting this rally. The long only managers are defensively positioned. They don't believe in a cyclical long. But look, if rates come down and the Fed starts easing, it's going to force people into a cyclical tilt. Today would have been a day where if it was weak, then the Fed has to change its calculus. But the job market's good. So now the waiting game is, how much will inflation surge over the summer? inflation expectations are actually coming down. So now all that we're waiting for is let it get through this CPI hump. I do think it means that once you get into September, we should really think about cuts coming. And that's what I would focus on more as an investor, that, well, that's a cutting cycle. The Fed won't just do one cut. They're going to continue cutting. ECB and the U.S., 200 basis point different in monetary policy rates. But if you take CPI year over year ex housing, which is how Europe calculates it, we're both at 1.9% today. We know Bitcoin ETFs are the most successful product launch in history. And then someone says, well, if you're going to collect that much money, Bitcoin goes to the moon. But it turns out Bitcoin's risen, but it's kind of churned. I think what happened is a couple things. One is a lot of these ETFs may have been receiving in-kind exchange. So people have their crypto keys, give it to the ETF provider, and then they just stepped up their basis. So that's not going to push up the price of Bitcoin. It adds to their AUM.
It's a wash.
Yes, it's a wash. And the second is that the ones who aren't involved in ETFs, but maybe they have $10 Bitcoin. We have clients that have bought Bitcoin at $100, and now it's 100,000. They're not looking to, they don't care if Bitcoin goes to a million. They are probably sellers at around 100,000. So we're churning the base now because 95% of the institutional world doesn't own Bitcoin, but a very significant portion of Bitcoin holders are sitting on huge gains. So I think this is the churn that's happening in Bitcoin now. But of course, the companies that serve Bitcoin, like Coinbase or Circle, have seen huge growth, and they've been the best IPOs and the best stocks. So it's almost like maybe you won't make money trading Bitcoin, but look at the infrastructure providers. They've been great stocks.
Tom Lee challenges the conventional economic metrics, asserting that these metrics are often manipulated to paint a specific narrative, like labor statistics and inflation figures. The ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value. However, Lee asserts this journey is just the beginning, comparing the initial years to the current widespread interest and investment, with a giant spotlight on Bitcoin ETFs. Lee highlights this being a significant development in the financial ecosystem, selectively measured to create desired effects rather than reflecting the true state of the economy. In this context, Bitcoin emerges as an alternative, detached from the manipulations of the conventional economic sphere. Lee also highlights that established corporations like Apple, Amazon, and Google will use their established relationships acquired over decades to swiftly acquire substantial amounts of Bitcoin through a spot ETF, bypassing the cumbersome processes involved in procuring the actual commodity. This disparity underscores the transformative power of cryptocurrencies in traditional financial institutions. Michael Saylor underscores the importance of embracing digital currencies as the economic landscape is changing rapidly, and urges investors to leverage Bitcoin's potential to secure a more prosperous financial future. What do you think about the latest interview with Tom Lee? And how do you think Bitcoin's trajectory in the coming months will impact the crypto market and the world of investing?